Moab, Utah boasts stunning arch formations, slick rock trails for biking, ATVs, horses, nature, fishing, even lightning filled gray skies are breathtaking in this area. Getting to Moab from Phoenix, Arizona is exactly 500 miles one way, unless you do not take the most direct route. The best time to decide which route you prefer is before or as you start this journey. But even if you wait to start planning until you take a wrong turn, the journey benefits. So it is with our financial journey. By creating a financial plan called a budget in 6 steps of the journey, we can feel more secure, less stress, and enjoy the ride. So let's summarize the 6 steps. Then we will describe them in a little more detail, and then we will review them one last time. So here we go. The 6 steps of budgeting. We're going to add up all of our income, then we're going to add up all of our expenses. Then we're going to compare our income to our expenses. You're going to write down who gets paid no matter what, and then you're going to write down who gets paid with all the rest of the money. Finally, we need to figure out a technique that's going to work to help us track ourselves. With that in mind and those 6 steps summarized, let's go ahead and jump into the first step. We begin by adding up all of our income. I don't care if you write it down by hand, if you use a spreadsheet. I don't care if you use your tablet. What I do care is that you add up all of your income for each of the last 3 months. Pre-tax, pre-health insurance, pre-retirement payments. Each of the last 3 months, add up your income and get a total. Then we can move on to the second step. Now you're going to add up your expenses. This is by category. This includes both the expenses that you did pay and the expenses that you skipped. I get that people sometimes skip paying their bills. You need to list everything, all of your obligations, all of your expenses here, all of them. I don't care if it's handwritten. I don't care if it's in a spreadsheet. What I do care is that it is tallied up for each of the last 3 months in the same place so that you can see where your money is going. Cash, credit, debit, all of it. Then we can move to the third step. The third step is comparing our income to our expenses. In my 10 or 15 years of volunteering to help people with budgeting, I have found that if I help 20 people, all 20 of them have a surprise of some kind. 1 out of 20 feels like they need more money coming in. About 4 or 5 people out of 20 believe less money should be going out. But the majority of people, 15 or so out of 20, think that, okay, I have enough money. It's a bit of a tight squeeze, but if I take a little bit away from here and move it over to there, in other words, just having visibility and a little adjustment, they can make it work. Allow yourself to be surprised. In our example here, we're consistently about $50 to $100 under what we bring in as income. That's great, but I'm wondering what I'm buying at the grocery store. I'm eating out so much that I now wonder if maybe a lot of the stuff at the grocery store is going to waste because I'm not sure what I'm purchasing there if I'm eating out that much. Allow yourself to be surprised. Don't get angry. Don't get upset. Just allow yourself to be surprised. Then we move to the fourth step. Now we're going to write down who is getting paid no matter what. Believe that you cannot pay all of your bills for a minute? Who would get paid regardless? This is a very short list. The government is always going to get there, so they're always on this list. But you should be too. Even if you don't think you can afford 10% in savings, then Pay yourself $10 or $20 a month. It doesn't matter. This is a very short list of people. This begins your budget plan. Those entities that are going to get paid no matter what and exactly how much they're going to get paid. Once you define those entities, you're going to move into step 5, where you finish filling out your budget. You're going to take your monthly income minus the money to those who are always going to get paid. What's left is called disposable income. Your goal is for disposable income minus expenses to equal 0. Now you're going to take the list of all of those expenses from step 2 and you're going to begin filling it in. If disposable income minus expenses is less than 0, then you either need more money coming in or less money going out. So maybe I cancel some subscriptions. Maybe I can't spend as much at the grocery store or eating out. If my disposable income minus expenses is greater than 0, then I need to start adding expenses. For example, maybe I don't have a car payment right now. So I sock away a certain amount of money each month and I can eventually pay cash for my car or gifts for $100 each month. Maybe I don't have the need for gifts this month, but I will eventually raise $1,200 in a year, and then I can pay for Christmas and birthdays with no problem. Your goal is for disposable income minus expenses to equal 0, written down as your budget. Once you write all of that down, now we move to step 6. You need to figure out a way that fits your personality to track yourself on this budget. I tried a spreadsheet. It was unsustainable. After trying a few other things, I realized my primary expenses that changed were food and entertainment. If I kept the track of those in my head and at the end of the month kept those under their line item budget, I was fine. That worked for me. You need to figure out a tracking technique that will work for you. Once you figured it out, now you're on your new norm journey. You've already taken the first 6 steps. This isn't like a diet. You're not going to get to a milestone and then jump off and go live the way you used to. This is your new norm. This is how you live your journey. So you're going to live it for about a month and then you're going to stop, assess, make adjustments. In all the years that I've been volunteering to help people do this, once did someone get it right the first time. That was not me. You make adjustments. You take a little away from here, put a little there. Maybe you sock a little more to the people who should always get paid. Whatever it takes. And then you go for another month. You stop and you do it again. Assess, make some adjustments. It's a slightly iterative process. This may need to happen for 2, 3, 4 months. But then you'll continue on your journey and begin to find that you're actually kind of enjoying this. So, in this budgeting mini series today, we went through the overview. You can get started today. We are going to follow this up with a number of episodes covering each individual step as well as examples on how to do those steps in greater detail. We'll also have a separate episode specifically dedicated to the journey. So you'll maybe want to subscribe and hit that like button, as well as add comments so that I can answer your questions as we go along. At the very end, we'll take all of the episodes, combine them into one final episode, and answer any final questions for those people who really like having everything in one place. So again, to review those 6 steps, we're going to add together all of our income. We're going to add together all of our expenses by category. We're going to compare our income to our expenses. Allow yourself to be surprised. Then you're going to write down who gets paid how much, regardless, always. Then you're going to document who gets all of the rest of the income. And then you'll plan and find techniques to track yourself so that as you're going along on this journey, you're not just surviving, but you're thriving. Here's my disclaimer. Don't forget to hit that subscribe button so that you see all of the next episodes that come along. Also, I'm going to attach a link here to one of my previous episodes that will show you an example of these principles being used. Thanks, everyone.